Good morning, everybody. This is Dan Hussey with Zaner Ag Hedge, bringing you our strategy of the day update for May 18th, 2020. Been kind of a quiet start to the week, and we'll look at some inside price action on the corn and the beans that started to break out to the upside maybe. We've made higher highs and higher lows day over day in price action, so that's a good look so far. And in terms of keeping with the consensus of the idea that maybe we're trying to form a bottom here and that the market or price action is starting to base and turn higher. We'll take a look at what that might mean. We'll also take a look at what some of the analyst expectations and the forecast for today's planting progress report due out after the bell and after the close. And so come back later this evening and we'll be taking a look at how those numbers played out as well. But starting us off today, corn, we see a generally, what started the day off to be generally a stronger market, kind of got faded and got some back and fill price action as we gapped up in early trading here this morning on the reopen. Traded up to 322 high in the July contract. Back traded towards 318 to fill the gap, little back and fill price action, but ultimately day over day here you can see us making a series of higher highs now and higher lows. So that continues a pattern of price action and maybe a little bit of stability. And again, if we can push above 320 and 322, 324 highs, this cluster of highs for the month of May, push through that level, we could be back to testing 330 as resistance. And ultimately, above there, the 340 to 350 area. But that could start the short covering is the point. We see trend line against the lows continuing to hold support. But really, the thing that still irks me about corn is that we've got just inside price action inside 12, a 12-cent range for the entire month, with a 312.25 low for the month of May and a 324 high. And this price action doesn't necessarily look like we are, getting that quick snapback reversal like we've seen in years past. And the last time, you're down at lows, you tend to see this quick snapback, and we might be in some of this doldrum-like pattern that occurs, maybe like that we saw in November before one more flush out into the end of the year before we saw a short covering that took us, in a 20-cent rally from $3.80 to $4 into the end of the year. Last year. But nevertheless, it's a different time of the year, different pricing and economics are going on right now, obviously, than we see in that off season and after harvest. So, but we still very much have inside price action for corn. But the pullback today, it's still defending a series of higher highs and higher lows. And if that continues and we march through the highs at 324, we could see continuation higher. So planting progress today. Last week, we were at 67% planted in corn. Analyst expectations, the range is between 79 to 87%. So 79% on the low end, 89%. So even the low end of the analyst expectations have this last week us adding at least 12% of completed, which really that would take us, well into all the way up to the Dakotas in terms of really having corn in the ground, and maybe even some places in the Dakotas have already really started to go because at this point the season seems to be turning. You see the weather across the Midwest now looks like we're going to get up into the 80s next week, or this. Is it later this week or early next week? Anyway, looks like we're out of the last Friday was that last bit of cold weather. That doesn't mean we can't get a cold snap or, I'm no climatologist and no weatherman, and we couldn't see a cold front come through or what have you. But now cold fronts are generally going to be thunderstorms and bring rain. And if that seed's in the ground and we're past the point and we're not, overly hydrated in some areas, that rain is just a good thing as long as we start getting some heat units alongside of it, right? Nevertheless, analyst average expectation here for corn planted is at 81%, so we'll see where that comes in today. Anything obviously behind that 81% and below 80, I think would work a little bit, and we might then, we'd be talking about having 20 to 25% of this crop going into a later type of planting season. Not that, I'm looking outside now, it's obviously raining, and we've gotten a lot of rain in Chicago here over the last few days. And, weather over the next week or so is not that wet. We only, ever really jump up to about a 50% chance of rain any given day going a week out here. There is some, weather there obviously here in the very near term that's making its way through the country as you're seeing, play out. But then once we get out till, next Sunday, we're I think in that period of spring, right, where every day there's a little bit of chance of rain, but it's not we're not talking about big torrential rainfall that would keep people from being able to get work done. So not much else to be said for the corn. Again, we're going to be looking to see how close we are to that 81% in the corn planting expectations and that number due out after the bell. So we shall see. Moving on here, we'll come back and we'll talk a little bit more about maybe some larger time frame charts tonight. But I wanted to get through and bring up that soybeans today also pushed through Friday's highs up to an 847.75 high of the day. Low of the day was where we basically started off at 838 and 75 and there, so 838 and 3/4. 50% retracement off of the highs now has been traded here into this 850 area. But that's not a technical level I would look to be a seller necessarily in this market. I think that we very much are in a range between 835 and 860. We're just finding our way off the low end of that range now and back, I think, towards 860 would be the natural move for this market in a period of price discovery higher. We are making now higher highs and higher lows. You can see how we have broken now outside of this inside price action from Friday and could be, making a short-term reversal. So if we see that follow through up towards 850, that is a pretty good indication that we're going to see momentum take us up towards 860 and maybe even up towards 870 and beyond. I mean, because really there's no lid on this market, I think, above 860 until we get back towards $9, where, in my opinion, that resistance we saw earlier in this year come back into play. And of course, that was broken support that we held into the end of last year and to start this year off. We broke below that support, came up, tested it once as resistance, even had that gap area. Very technical, psychological, big level that I think July might want to retest here before we go off the board. And to be fair, I felt like we wanted to see soybeans buy some acres at the last minute here. There's not many acres to be bought, but what they can buy up, I would have loved to have seen this market rally back towards $9. Now it's getting a little too late. Maybe there'll be some acres up north that are really holding off and might hold off because they see we have an 81 or 85. I mean, if we came into the high end of the range and at 87% planted corn, that's almost 90% of the crop across the country is in. If you still had acres, maybe you think about shifting them to the beans at that point, because we're about to do we're doing at least 90% of 97 million expected acres from the USDA. So that's a lot of corn in the ground in a year where, well, let's also I want to kind of jumping all over the map here, but I do want to, I guess, talk very quickly about crude oil. Because I guess it's worth noting that crude is on its way back up, and I mentioned some levels that we wanted to see it retrace back up to help ethanol feel a little bit more, a little better about ethanol demand. Because if crude prices get back to where we were, in this range pre-COVID and whatever we want to call this, crude had both an OPEC scare as well as this recession from COVID weighing on it, and it was a perfect storm in early March. And so that's what took it down here on the continuous contract. We're looking at the continuous NYMEX futures for crude oil here. And you're looking, at this point, it was rolled over to the June. It was that May contract that went negative when the June was down around $6. So you got to remember that May and any front month future is reflective of the delivery of that commodity, not necessarily the spot price. In other words, not the physical price at market. It is the physical price of the delivery of that product at market. And that's why crude can go negative, or any commodity could go negative, because there could be a point where the market says, we're not taking delivery of this product, And you effectively, if you need to deliver it, you're going to have to pay somebody to take delivery. And that's how the price goes negative. And that's what we were seeing, that dynamic playing out in crude. There was no storage worldwide. Obviously, there's probably some on rail cars and boats and places, in nooks and crannies and under people's mattresses that they'll find to store crude. But nevertheless, we've seen a recovery in price that has taken us back up to test near where we had that technical gap down from that 40 area down towards 32, 33. We're back in testing that area as resistance now. If we can climb back up above 40, that to me is a green light that ethanol is in the clear. Crude and energy demand is going to be back, and we're going to see crude probably get back into the range we were in before and trade between an $80 to $50 range that we saw it in over the last couple of years. Now, going further back, obviously, we are well below. You can see here on a chart, the last time crude had a big breakdown in 2014 to 2016, we had lows that we found in February of that year. We are below those levels as well right now on a crude chart, around $30. And so I would like to see it get back above and stay above 30 now, and be in the range that we've seen it in. And you can see here for the last couple of years, which has been between $30 and $40 on the low end, and $70 to $80 on the high end. And right now we're trading in a range below that level. So we want to see crude get back above it, because that would mean that corn could be back to the $4, $5 push if we start to see price rationing and some price elasticity come in that drives prices higher, because crude oil would be in the same market dynamics as before. If we don't see that occur, and crude oil is going to be in a $45 to $20 range and be below this big December low at 42.36 that we gap below, if we stay below those levels, it's going to be really hard to assume that ethanol facilities in the ethanol industry will continue as expected. Now, there will definitely be government mandates and forced blending, et cetera, et cetera. But if an ethanol facility is unprofitable and it doesn't make sense for a refiner to blend with ethanol if he can't get it or can't find it or what have you, I'm sure there's exceptions that say if you can't get ethanol or source it for some means, you don't have to do it. Or I'm sure there's a way that if ethanol industry as a whole went under, or wasn't there to produce, but we have to assume that it is, right? And the only reason we're seeing a slowdown in demand right now is really because of COVID. And not as much because of the price of crude per se, because there are those government mandates for demand. But nevertheless, we'll see if a rising price of crude is going to help corn. Corn's been trading like an energy product, and granted, over the last couple of weeks, we've seen it now start to, I think, find a little bit of a footing now that that crude oil has as well. So back to the beans for just a hot minute. Again, higher highs, higher lows, back towards 860 in the near term is likely what I'm expecting to happen. If we do fall through the low of today, however, look out below, because we will probably be taking another creep lower towards $8, and $7.75 would be the big downside target in my opinion. $8 is just a mere stopping point. And in the wheat market, we are continuing to press below $5. We are hopeful that we would have held and defended those prior lows here. You can see how wheat made a higher high and a higher low early last week. That's a good indication of maybe a turn happening, that it ended up becoming a little bit of a fake out. Now, that doesn't mean that today's push could be a stop run fake out that we would whipsaw back, but we would expect today to close back above 502.75, the highs of today, if that were going to be a head fake. So as of right now, there's nothing we can do but assume that we have a downtrend that had a 2-day correction that is now resuming. And that downtrend could take wheat, back below $5. Should have had my daily chart up there. There we go. We can see that below $5 really opens the door for the prior contract lows here for July down around 468, 470. So, I'm optimistic we'll find a low down here, but we need to see, because hey, this time of year we should be seeing some rationing of other wheat stockpiles globally, and a turn to U.S. domestic demand, or U.S. demand, a turn towards the U.S. to meet that global demand. But right now we have a very strong U.S. dollar that is weighing on that idea and continues to, even in the face of a remarkable market when a market where the Federal Reserve and where bonds and the 30-year are at just unbelievable levels. And here's a chart of the 30-year. You can see uh, where we've been, where we've come from. If you go back here to 2008, to give you an idea, we're trading at 140 to 138 back then. We're trading at 179 to 191 in the bonds. I mean, just way, way, way higher. And it's amazing to think that with all of this easy liquidity out there, and as high as the bond market has rallied, because right as the bond market rallies, that represents interest rates going lower and effectively the cost of borrowing money going down. So liquidity is amply available to the world, and when we're not getting like these inflationary pressures just yet. Well, we might see a period of rampant inflation, and it'd be great to see that continue, that play out. But that's all. Who knows at this point? So. One more quick look here today before we wrap things up. Soybeans, excuse me. Planted acres here, we're at 38% last week. We're expecting it in around 56%. That's where analysts' average expectations are. The range was from 50 to 63. So we're expecting to see the soybeans half completed today as well. Spring wheat coming in. Last week it was at 42%. Planted, we're expecting it to be around 60%, with analyst expectations of 56 to 66. But then, so we'll see where that comes out here after the bell in the planting progress report. Wanted to bring up August live cattle here because we do have a monthly reversal pattern playing out, but a gap up in the charts around 95, where filling this gap and a little bit of a pullback might be a buying opportunity, but you'd have to be very careful, because slipping back below the lows of the month around 91, we could continue to fall and reverse, because be wary here for the cattle chart in August. We have traded into that 50% retracement off of the high. I'm optimistic, though, that we've seen a reversal in the cattle. If you pull up now a continuous chart of live cattle, you can see where we've come, where we've been, and how I think we'll get there again. 127 highs of last year, or into at the start of this year. We had that precipitous sell-off to start this year. Big gaps on the continuous chart that genuinely will probably fill, and we can look for what those gaps look like in other markets. So August cattle probably has a gap up there around 116 to 115. We'll take a look at where that is, specifically where I think it'll climb back to. But generally speaking, I think that we're seeing a bit of a reversal here now for live cattle, and starting to see maybe a bottom starting to form. And here's that gap. It's actually at 112 here in the August. So I do anticipate the 112 gap, the 108 gap here to fill at some point. I am cautiously optimistic about this 95.36 gap, or 95.60, excuse me, gap, probably filling at some point as well to the downside. But generally speaking, I see some strength in the cattle market. That's probably reflecting a lot of the strength in equity indices, as cattle trades very highly correlated as a almost like a barometer for the general market or the economy. Right? The taste for beef is a bullish thing. No pun intended, but kind of. Anyway, a little bit of a range right now between 101 and 95. We're probably going to expect to see that to continue here in the near term, but that's not a bad thing. That's just a bull flag forming where we push back above $1 and can settle and start there. Now we start talking about that run back towards $1.20 and catching up with where some of the cash markets were and where I think they could get back to. So with all that being said, watch out here. Corn starting to find a footing on the day, maybe climbing back above 322 highs of the day is pretty bullish and could result in some short squeezing beginning in an otherwise quiet market. But again, below the lows of today, I think things could continue to deteriorate. The same could be said for soybeans here. Above highs of the day, we'll probably be hitting back to 860 and maybe even beyond. I think a test back towards $9 is likely in the neighborhood now. We were expecting that one more flush out like we saw last May. We didn't see it this year. Maybe these markets have put in a footing and are trying to base now and head higher. We'll see. Every day making higher highs and higher lows. This is how it begins. You got to walk before you can run. The markets had to, crawl before they could walk, and they're starting to crawl again. So we'll see what happens. All right, everybody, we'll be back with you after the close. Have a great day. And again, if you ever have any questions or want to get in touch with me, here at 312-277-0110. That's 312-277-0110. Give me a call. Always here to talk with you about your marketing and trading needs. You can hit me up on Twitter at Daniel Hussey Jr., Dan SOTD on Facebook, or shoot me an email at dhussey@zaner.com. With that being said, have a great day, everybody, and I'll be back with you later today and as price action develops. Take care, everyone.